Hello guys, welcome back. So we'll continue from where we stopped earlier with with this rundown objective in mind. So we had that in mind, but I didn't place like an entry or anything. I just stopped somewhere around here. So we don't take trades. So this is not a trading advice. So I'm not a legal trade advisor. So I didn't take that trade. I didn't you know, say I was going to enter here and place my. I didn't do any entry like that, anything entry. But we knew that we were going to get a reaction off here, and also I made mention of we don't even need to to finalize that the market is going to reverse, and continue going upward entirely. We might see it go up and come down again, but then we just want to catch, want to see ourselves in the reaction from this BC daily. Do you understand? So we want to see a reaction from there. Actually, this I don't know how this red line is supposed to be here. But this was where I entered. I said I was going to enter before I now pulled it down on the phone. But I now pulled it down so that you don't say I was giving trade advice. So, that was meant to be like the entry there. So entry, we noted this old high here, old high draw on liquidity. We expect to see buy side liquidity, you know, hold over that high there. And then we have an IFVG here that we already see we've already got a reaction here already of the IFVG, but we got the reaction. It came down into here, then made a high here, and came down fully into the main threshold of this BC from the daily chart. So that would high there is significant. We can target that from here when we are still here. We can target that old high. So this 2 hour time frame. So imagine if that was from a 5 minutes or a 1 minute. So you will know that you catch a very good entry and a very good risk to reward as well if you are a believer of that. So this with 1 hour. Let's go down to a 15 minutes time frame. So from this 15-minute time frame, all you could have done if you were going to enter in your paper trading account, not like live money. I'm advising you to like demo trade, like just enjoy the market. No need to bring anxiety or fear into it. Just enjoy it like it's. I know of someone that says you only put live money when you are bored of you know seeing it happen over and over again. That's when you're supposed to put live money into it, because at that point you have no um, emotion attached to it. You still have, but not so much compared to when you know you've not gone through it and seen it over and over again. So yeah, you can put here your entry here at this red line, exactly this red line, because that was the bullish order block. So, and then also the mid threshold. So any of those two, your entry would have been filled. So any of those two entries would have been filled. Not going to 5 minutes. Not going to 15 minutes again. We have a series of old highs here. Series of old highs. I'll draw on liquidity. And then that's that old high from the 4 hour charts down to the 1 hour charts. And what do we have above that old high? We have a sell side imbalance here. Yeah, that could also be a target. So let's say you entered from a 5 minute chart. You entered from a 5 minute chart. you've mastered the things I'm teaching you in this with this live this live market watch, because it's just like demo trading. We're just following the market live with demo trades, or not even trading at all, just watching it, annotating where you're expecting it to go, taking note of that. You understand? So let's say we're taking a long from here. I like to enter with a limit order. So taking a long from here. To this other red line here. So, 6 to 1. But then I'm going to cut down the, like I said, entries here. We are leaving no room for, if it stops us out, it stops us out. But if we get an entry, then we'll get an entry. With this kind of trades where it's on the higher time frame, yeah, and it's been showing no willingness to go the other way, in the sense that we have some form of consolidation here, yeah, consolidation here, then it breaks out. So all here is consolidation. Forget that you can see that this, you can see this higher than this. Doesn't really matter. All here is market was consolidating. All here, here it was most likely consolidating. Then here it took off, continued. Here it took off. This reaction here, IFG here, this small gap here, IFG, because there was a rundown into the buy, the sell stops that are resting here. You can see you trade off it. There are people here. There are people here that want to put. That would like to put trades on here. So I put their stop loss this close. So you trade right into it, trade off, then comes down one more time, dips past it low, and trade off. So it traded down into it, took up the low here, and took up the high here, continued, then continued taking this other high here. Then here you can see the strong close, this strong close here to take this all the highs here. You can see it. You can see it. So it took all the highs that were resting here. It took them all. Old highs, PDRA matrix, old highs. So it took those old highs, use it as support, and also it also found support from this block here that shot the market through those old highs. Can you see? So it returned into that here, then traded upwards, came down one more time into this bullish order block here that sent the market over these two highs, which is actually significant because they made a high, came down lower, they made a lower high. Can you see? So this can be called engineering liquidity, because here it's consolidated a little bit, then made a lower high. It didn't make any high. It didn't make the high that's higher than the previous high it made, and then it came down. Then you can see a strong bullish candle to take both highs out. Then it came down one more time into this other block here, this proportion block, because here is the other block. This proportion block here, then continued, came into it, right into it, then continued going high. So assuming we took that trade here, assuming we took that trade here. This is one for 16, one for 16. Entries are sniper entries, like I said. Not every time, but most of the time we have sniper entries. There are times where we still have 30 pip stop loss. There are times where it's here will be here will be an entry. But I want to sometimes I want to most of the time give the market room to be nimble. So we can always let's give it to some room. Don't need to be don't need, don't need to be that greedy. So let's go here. 148. So 7% of the time, these are my trades. 148. When I was starting out, I would take a prop from here, take one of these trades, wait for one of these trades. Like we really wait. That's when you know that the 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 hardest thing in trading is waiting. That's like being patient, waiting for your model to present itself. So and there are times where you wait and you still miss the trade. But then and that's what they call FOMO. That's where FOMO comes in. Your next setup, you don't want to miss it. It might cause you to enter too early or too late. So those are things that leads to our topic in the coming weeks, which is going to be centered around psychology. So so the market is reacting below below the weekly imbalance. Weekly imbalance. So look at this old high. It ran right through it. Look here now. There's a low here. Here. There's a high. There's a lower low. There's a high. This one made a high. It made a low. Made a higher high. So here now is the breaker block. Here now is the breaker block. Little body but carries weight. So here is the breaker block. So here is the breaker block. Right. Here is an order block from the 1 hour. This last down close candle. Series of down close candles. But then here is 1 hour. Order block started here. This candle here. You can see. So you can see the old high from the hourly. It didn't get to it. It didn't get to it. So we can also see a very big up close candle here from the 1 hour. So before this retracement lower, this retracement lower could be it fulfilling sell side just a little bit, then continue going higher. Because I would expect it to actually turn when it takes this high here. When it takes this high here, this high here, noted here. I'm using a touch screen, so I don't know why it's maybe it's because of. So this high here, I'll be my mouse. Or rejecting from this candle here, this long candle here. From here to here, it's a CB. So we can always get a reaction there as well. But as I said, it can come and get and happen to be a rejection here. because there's a lot to have it reject there, and it can also come straight to it through it to this point here. This point here is actually more key compared to here, so you have that in mind. But then here we've already got a 1 to 8. Now that's like our main trade objective. Now we want to see if it would correct or if it would continue going higher. So we're not rushing it now. We're just going to stick around and watch it. So this last run here was the run into the last 15 minutes run I said we're waiting for. So that last run usually happens every day in most of the market asset class. So that last run here from here this 345 here like this last one always happens most of the time. So you can take note of that and just take that trade whenever it's that time of the day. It's like a solid OTE entry. It's like a very solid OTE entry. In the body of that candle, the body of this candle. This large range. So it's coming and fulfilling sell side, and it's going to explode higher, attacking this high here. This high here. This here, it took this too high. I think I made mention of this earlier, which is actually significant and comes right into this. And we have a point where we can see our interest go into. So it came here and shut up. Like I said, this close candle here could be some form of delivering sell side for it to continue higher because it's just running to the weekly imbalance, which is actually it carries weight. You understand? Let's go back to the one now. You can actually get lost. So it's better you keep going back to the high time frame so that you know exactly where you are. So yeah, this is what we have so far. So as after catching 1 to 8 without being greedy, we could also make our stop loss to capture 1 to 15 if we would like, or 1 to 10. But without being greedy, we had 1 to 8. Give you room for the market to 1 to 8. If it wants to stabilize into this main threshold, it's going to start into it. So that's what we have so far, so good. And this is happening on the market close. New York, that's PM New York. If I continue higher, it might go into a consolidation up until 6 p.m. Up until 5 p.m. 6 p.m. it opens again. So just keep an eye on it. Continue to stalk it to know if it's going to continue higher or go into a major discount array, PD array, to continue going higher. So it will go lower to go higher again. Let's just keep an eye on it. Alright, I'll talk to you in the next 20 minutes. Be safe.